Now, a high-level Zimbabwe investment and trade conference has been underway in South Africa this week, held under the theme Invest in Zimbabwe, Building Partnerships in Diversified Economy. The conference sought the attentions of institutional investors, fund managers, private equity managers, debt equity financiers, investment banks, and multinational corporations. Panashi Chigumadzi caught up with Mbanga, partner at Deloitte Zimbabwe. She asked for his assessment of prospects and opportunities for investment in Zimbabwe.
As a firm, we've been there for, through the highs and the lows. We've been through the period of hyperinflation, which the country came out of fairly recently. And since then, we've seen sustained growth over the years, since the introduction of the US dollar. And it is quite positive as we move forward. Yes, the environment is still constrained from a liquidity perspective, which is why this particular investor conference is important, because the issue of foreign direct investment into the country is important in terms of driving that growth and driving increased liquidity in the markets.
Mm-hmm. Of course, you audit a broad range of companies across many sectors. What are the key themes you're picking up right now? From a Deloitte perspective, you're in touch with so many different companies from various points in the economy.
It is a mixed bag. I mean, we have seen some of our clients are doing extremely well in this current environment. I mean, you will have seen in the markets that there are some big counters that are doing extremely well. And, there are some that are struggling. I think those that have struggled to get foreign investment or to raise capital that is cheaper are struggling in this current environment. But those with good business models that have been able to harness either strategic partners from the regions and beyond are doing extremely well in the current market.
Mm-hmm. Yeah. Looking at, I suppose, that the growth in the economy right now, it has been said to be pulling back slightly from the buoyant 2009 to 2011 period. And there have been critics of it. For example, one of the critics, Professor Craig Richardson, he comes from the Katu Institute. A lot of publicity around his article talking about the dollarization impact on the economy, stabilization, inflation, talking about the impact of high commodity prices on the economy, and also saying that donor grants has also been partly responsible for growth that we have seen. What's your assessment as to some of these comments and the fact that he's saying growth right now in Zimbabwe is unstable and unsustainable?
Well, basically, coming out of hyperinflation, I would say the economy was coming from a very low base, GDP-wise. And the stabilization of the US dollar allowed, business to eventually be measured. And some of the business that had moved into the informal sectors, becoming formalized again, through the various formal chains, etc. So that led to that initial growth. But I think, agreeably, the issue of liquidity in the markets and the access to lending at reasonable rates has constrained some companies in terms of realizing additional growth. So in a sense, it might be right that we've reached sort of a plateau in terms of stability. There could also be a sense of wait and see from some companies, and some companies hoping that they will still get foreign investment coming in. But the companies that have got good strategies and that are aggressive, you will find have not been constrained by the environment as it is, and continue to register growth.
Mm-hmm. You talk about strategic partners in the region and capitalizing on being in the region and the markets in the region as opposed to just focusing on the domestic economy. But elaborate on some of the companies that really have got it right and being able to remain strong and, I suppose, stable within this shaky recovery time.
I think it's a case of having, you have to realize that the Zimbabwe economy is very different to South Africa. Coming out of the hyperinflation period, there's a huge informal sector. There's a huge market that, is at a very low level of income. In comparison to South Africa, for example, where there's a thriving middle class and a growing middle class, and in some of the other African countries that we see. But Zimbabwe is very informal. It's very, much at the low level. And companies that are able to, produce products, reasonable products that can access those levels of the markets, are able to capitalize. So for example, you will see the growth in the mobile telephone usage, for example, in terms of just the mobile penetration rates have been going up fairly significantly, I think in excess of 80%. And that's because, it is a good value proposition, for the mass market. Also in terms of mobile money, a lot of the retailers are also doing well. Some retailers have partnered with retailers from South Africa, for example, your Pick n Pay, etc., seem to be doing very well and driving a lot of volumes with meaningful product ranges that can access the broader mass market. Beverages are also doing extremely well. Because these are all products, I think, that talk to the type of market that's there right now, which is very consumptive. The downside for Zimbabwe at this point, though, is that the manufacturing sector itself is not able to fully respond to that market and to that growth, due to the lack of capitalization and the lack of access